My first video ever. My name is Silvano. Yeah, you guys can call me Silvano, yeah, if you want. I don't care. But this is the first video ever on the channel. I'm gonna be going over what made me take this trade in particular, or well, I'm gonna go over my last week's trade on GBPJPY and what I'm planning, or the trade I am planning to take uh, this Sunday when market opens again for Forex. Okay, let's get straight to it. So, first of all, I do my top-down analysis on all of the time frames. So, first thing I saw was a 2-hour supply zone on the 2-hour time frame. So I laid that out with the gray box like this one. No borders, no anything, just that. So I went to the lower time frames and I saw that, well, obviously you know that we're pulling back once this structure shifts. So we have this breaker structure, market structure shift here. So we know that now the pullback has begun and we're looking for buys now. So last bullish breaker structure happened over here. This was the last bullish breaker structure. Or you guys could say that this was the last bullish breaker structure if you really want to be specific. Either way, the same result occurs. So we have the same result. I'm gonna put this as the last bullish breaker structure, and this was the market structure shift right here. But there was no other breaker structures after that. We have a liquidity sweep. Obviously, we see how this massive candle comes up here, activates activates all of those buy stop traders or all of the people trying to trade the continuation of the trend. So if you place your like buy stop order there and you put your stop loss there and you place your take profit like at these highs over here, you got tapped into the trade and then immediately you got stopped out because price comes down here. Boom, leads to this market structure shift. We take all of these lows and we tap into a demand zone on the daily time frame. If we look all the way to the left, you guys can see that we have a demand zone to the left of this. So we had this demand zone here and we tapped into it, so which led to that reaction. So we took a lot of that liquidity and we tapped into a daily time frame demand zone. And that's why we had that reaction from there. But of course, we already had the bearish market structure shift, and the trade or the market structure was already bearish. So what I waited for to get into the trade was for these double highs that you guys can see here to get taken out by price. So if I go to the 1 minute time frame, we can see the double highs better than me just showing it on the 5 minute time frame. We see that we have this 5 minute highs here or 1 minute highs here. Price comes up here. This burst reaction here, we break structure in 1 minute time frame, and right after this 1 minute market structure shift occurs in a 5 minute time frame, I get into this trade. I hope on the trade, right around right here, I think. Boom. And I put my stop loss at the high that got swept, so right around right there, and I aim for a 1 to 2 risk reward ratio, which is right around here. Boom, my TP got hit and I made $90 on this trade and I risked $45. So it was a very good trade. You guys into reference on why I say it was a good profit or whatever. My account is $4,500 and something dollars. So risking 45 to make $90 is a 1 to 2 risk reward ratio, which 2% of my account. So it's good. It's good. Those are good returns, right? Now we come back. Now I see that during Asia session, instead of retracing all the way back up here or taking out some liquidity, we immediately go down. So that lets me know that during London session, this supply zone is going to get disrespected, because normally when Asia session continues the trend to the downside, it's because we're going to have a change in trend during the next session, and that session being London session, right? Most of the times. Sometimes it doesn't happen. This time it happened. So you guys see here that we're getting some selling pressure from this supply zone right here that swept this liquidity, right? But it's not enough, and price disrespects the supply zone and closes above the high here, which leads to this 30-minute market structure shift and a market structure shift in 1 hour, 2 hour time frames. All of the time frames aligned, so you guys can see 1 hour market structure shift. Sorry, let me fix this so you guys can see 1 hour market structure shift, bearish market structure, 1 hour market structure shift. bearish wick structure, 2-hour microstructure shift. So, and 30-minute time frame, all the timers aligned. So now during near session, I wasn't looking for buys immediately off of here with this demand zone, which is where most people buy from. I had in mind that we could sweep these lows, right? And we had a lot of selling pressure from here because, again, this is like a supply zone, and we also swept these highs right here. So I knew that we had to collect. What I was looking for was a sweep of the previous session lows. So I wanted this to happen. So sweep London lows and Asia lows, and then continue to the upside. Which these are not Asia lows. These are just London lows. So I was looking for London lows to get swept, and then continue with the uptrend. So I knew that placing a buy limit order here was stupid because price is just gonna come down there and sweep those lows. However, I was not expecting Asia lows to get swept as well. I only expected for London session lows to get swept, but we had a sweep of Asia lows as well. We know it's a sweep because candle did not close below this higher low, right? If the candle had closed, then we have a market shift to the downside, and we would be looking for sales from this supply zone right here, which the supplies will be this entire thing probably. But in this case, we're not looking for sales; we're looking for buys. We get the sweep, we immediately get a 15-minute market structure. We get a not market structure shift. Structure is already bullish. We get a breaker structure of the liquidity sweep. So this is where you could hop on for buys as well. I mean, you could hop on for buys right here at this demand zone and just put your stop loss immediate there and just aim for a 1 to 2 risk reward ratio, and your TP would have gotten hit, as you guys can see. I typically do not trade that. Or honestly, I wasn't paying much attention. I was waiting for something bigger to happen. So I see that during this. I think this is London session. During London session, came up here. We swept these highs to the left. Almost, you could say they're New Year highs. They're not, but we get close to New Year high, and we immediately have a bridge reconstruction to the downside. We have a market structure shift right here, which makes that and our protected high. To know where we want to look for buys, since we know we're bullish, we would have to wait for a market structure shift to the upside to occur. So if we come up here, right, like, okay, we can see that we have selling pressure from here. So you guys could have just placed a sell order right here and just aimed for this extreme demand zone under here, which you guys are going to see that we have a bullish order block right here with equal lows to sweep, sorry. And price, again, we have another massive sweep. We sweep the protected low on the 1 hour and on the 30-minute time frame. So this was the last bullish breaker structure in the 1 hour time frame. Lows get swept. We have a massive bullish reaction from the sweep. So a lot of buying momentum from the sweep. So a massive bullish reaction after sweeping those lows. We break structure on the 15-minute time frame. Boom. And we have this. This would be a protected high in this bearish market structure. So if a candle closes above our bearish, so a lower high, we have a market structure shift to the upside, and now this would become our higher low, and this would become our higher high, right? Boom. So now if we use our Fibonacci tool, we can see where to look for buys. So I already have mine set up over here. If you guys need the settings, these are the settings for the Fibonacci retracement tool that I use. Just pause the video and copy them down. So we would have to go from here to from the higher low to the higher high. Boom. We have a key levels in price where we will be looking for buys. So 61.8 retracement level, that's already a good area to be looking for buys. Price is already at discount right there. So you guys can see that we're getting buys from there. But even better is the 78.60% retracement level, which we come really close to. So we're like at the 77 point something. So we're really close to that point. So as you guys can see, once price comes down to that level, almost at the 78.60%, we start getting a lot of rejections. How do we know there are rejections here? Well, we see that we have, first of all, these 5-minute lows got swept. We have a 5-minute liquidity sweep here, boom. And from there, we go up here. We try to immediately continue the bullish trend after sweeping this low. So we get a rejection from the 5-minute supply zone. Boom. Price comes down here, activate sell stops. And now we come all the way up here. And that leads to a, well, you could say a break of structure on the 5-minute time frame. that we would like to be looking for buys from. So now after that happens, before that happens, we have one rejection. So we have 1, 2, 3 taps into the support level. So we know this is a support level now, right? So we have 3 rejections, and we form a order block on the 3rd rejection, and we have a very bullish candle. So this entire candle right here, this candle, it's very bullish because you guys can see we left a displacement behind. So a lot of buying orders are getting filled. Now we retrace back to this bullish order block right before the session ends, and we get some buys from there, but we have sells from here as well. So sellers come to the market, leave to this break of structure to the downside, and immediately after that, buyers step in. Market structure shifts like this. Internal market structure shifts to the upside again, because we know that our protected lows, again, this is their range we're trading within, right? And this is just internal market structure, as well as this, and like this entire thing is just internal market structure of this range. But this is internal market structure. This is like the internal. But this is like the Baines and shit. Like, after that happens, we get this market structure shift. Now, this low could still get disrespected because again, the range is this one. So price could technically come down here and then continue being bullish, or it could just respect this market structure shift in the internal market structure, and then continue at the buy in order flow or the bullish order flow. So what I would do here is, now if you hop on the 5-minute time frame, we see that we had a reaction from the supply zone, right? But then market comes down, like the price comes down here, we activate sell stops, and immediately we're having a massive bullish momentum to the upside. So we have a liquidity sweep, and then you could call this a break of structure if this happens. And this is where I will be helping out for buys during Sunday. I would be looking to buy from there immediately after this break of structure. So probably I would get in around there. Since I have a $4,500 account, which is not much, I would probably just go for a 1 to 2 risk reward ratio. So also aligned with the key levels on the Fibonacci retracement tool. So using that, I'm marking my higher low and my higher high, right? Higher low and higher high. Boom. Go from the higher low to the higher high. And now we have our 2 possible take profit. So we see this is a good take profit as well, because we have some highs here to take where stop losses are. So we have that take profit, we have these highs, and we have these highs over here. So we have 3 highs to take out. Obviously we have another one right here, which is the one we expect to get taken out. So you can hop in for buys right here, like I'm going to do next week. I'm gonna hop in buys. It's probably gonna be a market order, not a buy stop order. So I'm probably gonna get in right there when I press the buy button on my phone. And this is why I set up like this. And like I said, this will be the trade I will be taking next week. So this trade, you guys are going to see. I'll probably post the trading recap over here. I don't think I recorded the whole thing, but if I did, I'll show it. Yeah. Thank you very much for watching this video. It's one of the first videos on the channel. I know that my probably like my way of speaking, it's not the best yet. I'm not very good explaining yet, but I will get better as we grow the channel and as I keep uploading more videos. My English will get a lot better, and I will get better at explaining things, and I'll try to improve things, and I'll try to like do a correct list of what I want to say, because right now I'm just jabbing. I'm not really following like a script basically. Hope you guys enjoyed, and I'll see you guys on the next video.